Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is our good friend, Mark Yaxley. He is the managing director at Strategic Wealth Preservation. Mark, welcome back.
Guys, always a pleasure.
Yeah, it's always a pleasure having you back. Mark, silver premiums keep creeping up higher and everyone keeps talking about them. How distorted is the silver spot price compared to the physical market?
Well, I can start by just addressing the premiums. I just checked before we started recording, and they're up. Not only are they up, but they're up notably right now. Silver maples are 50 cents this week, so they're now at wholesaling at 550 over spot. So that's a 10% increase in the premium in 1 week since I last
Wow.
checked. Silver eagles are up wholesaling at 13.50. That's $1.50 higher. They were at $12 when I did an interview last week. So that's really significant. And also, what's interesting to note is that the delivery time on physical products has shifted from live, which means that if you ordered from a wholesaler or a retailer, you could expect delivery probably within like 3 or 4 business days. They're now listed at 1 to 4 weeks, 4 weeks on the more popular products. So, what that tells you when you've got rising premiums and longer delivery times, it means demand is up and supply is down. And how that correlates to the spot price, I think we're starting to see some encouraging spot price movement for
Hmm.
both gold and silver. The last couple of trading sessions, we're seeing a ton of demand right now. Honestly, on the dealer side, some very, very large orders, and we can talk about that. But I think the spot price is probably much lower than it should be, given the premiums and delivery times that we're seeing right now.
I've seen that the platinum supply in COMEX is draining dramatically. And I don't know if
Hmm.
that's something that, it's not gold, it's not silver, but it's still a precious metal. Is that something you've been watching at all?
Yeah, I mean, we deal in platinum and palladium as well. They're really small market products. And I didn't check before this interview, but I can tell you just in the previous weeks, there were a number of products that just weren't available at all. So I'm not surprised to hear that the COMEX inventory is also being drained. We're seeing the same thing on the physical side.
Yeah, so look at this. COMEX, 24% draw of COMEX eligible inventories in one day. I
Wow.
mean, they're down to, this guy calculated just yesterday, COMEX could be completely drained with $184 million, which is nothing.
It's a
Um,
small market. It really is.
and
Yeah.
it really is. But here's the key thing. Russia is one of the biggest producers of platinum and palladium. And so I'm wondering if supply from Russia the past 6 months or so has just been interrupted and it's forcing the vaults to be drained of, some key industrial metals like
Hmm.
platinum and palladium.
Well, that makes sense because, Russia, as we know, was removed from the COMEX and the LBMA good delivery list
Mm-hmm.
in March of this year. So that makes perfect sense, Jim. I would assume that has something to do with it because, yeah,
Yeah.
they supply, I believe, greater than 20% of the global production for platinum and palladium,
Yeah,
if
palladium's
not
like
more.
four. I looked it up when I saw that guy's tweet. Palladium, Russia produces 40 something percent, 45% of
Wow.
global palladium and 15% of global platinum. Only
There you
South
go.
Africa does more platinum than Russia, but 15% is 15%. If the market's missing that,
Yeah.
that's a huge number.
And the premiums on those products are really, really high. You're talking like over 10% on both sides.
Mm-hmm.
So if you are looking to make a platinum or palladium purchase, you better get in line because there's not going to be much left very soon.
Mark, you've recently spoke about the Moscow gold standard a lot. Can you explain that to our audience and what's happening there?
Yeah, it's a really interesting story. The finance minister of Russia's central bank put forward a proposal basically to launch an alternative to the LBMA. They claim that the LBMA is manipulating price discovery and that this new exchange basically that they're proposing would provide better price discovery. And really, it's a very self-serving story because they, like we said earlier, they were removed from the COMEX and the LBMA good delivery list in March. They were then banned by the G7 countries, the EU, and Switzerland, who's a major player in the gold trading market in June and July. So when that happened, basically Russia lost half of its gold trading lines. It could no longer sell its exports, which is its second largest export is gold. So its market was cut in half. So now they come to the table and say, hey, we're going to propose this new exchange because the LBMA is corrupt. And I'm not saying they're not, but that was the argument. But here's the funny part. So I dug into a little bit. The banks that are going to be responsible for the price discovery on the Moscow gold standard are the Russian central bank, the
Mhm.
Belarusian central bank, the Armenian central bank, and the Kazakhstanian central bank. So, not exactly stellar track records there in terms of anti-corruption. So
Yeah.
I don't see this thing taking off. It's very self-serving. They're trying to do this while they're waging a war. So their global reputation is terrible. There's no way a Western country, G7, EU, Switzerland is ever going to trade with these guys. Not
Right.
not in the foreseeable future. So I don't see it taking off, but it's an interesting story to watch.
Well, I mean, all their exports for gold are now going to India and China, essentially, which gold is a global commodity, so I don't think anyone really cares where the source is. So they're able to export as much as they want. It's actually, I saw Switzerland had actually reversed course, and they are now importing again from Russia.
Really?
And because Switzerland's not part of the EU, of course,
That's right.
Switzerland can do whatever they want. The sanctions don't apply, and Switzerland's one of the biggest refiners of gold on the planet. So
I wasn't
Switzerland
aware
is,
that they'd reverted course. That's news to
yeah,
me, actually.
it was like within the past week. I recalled seeing the numbers for the previous month showed that
Wow.
Switzerland was importing again from Russia. But China and India are, of course, always outlets for those types. Commodities are commodities. Oil. Once you mix oil from one country and another country, no one knows where it came from at that point, right?
And there's a lot of that going on as well, right? We've
Yeah.
read reports of gold basically being processed in other countries so that it's not Russian gold any longer. It's being re-refined and then sold into these markets again. So it's really hard to control, like you said. I mean, you can't
Yeah.
really tell. Once gold is being
You
refined,
melted and put a new stamp on it. No one knows, right?
that's right. They are having a hard time with those sanctions for sure.
Mark, you work at Strategic Wealth Preservation, so you can kind of see what's going on and what the demand is. What are the lowest premiums and what are people buying right now?
Look, I'll tell you guys, September has been crazy for physical precious metals. And I say that a lot. Like, we're always pretty busy, but we're coming out of this. Couple of things to remember here. Seasonality in precious metals, it's a real thing. You've got the wedding seasons, you've got the jewelry demand, but you also on the investment side, typically the fall is really, really busy on the investment side. And we're seeing that in September. It's the busiest month we've had in the last 12 months. And the other thing that jumps out to me is the size of orders. There are some massive, you're talking multi-million-dollar orders that are coming in on a regular basis. You might, in a good month, the average dealer might get 1 or 2 or 3.
Right.
We're seeing, on a daily basis, you're seeing these multi-million-dollar orders, which tells you these sophisticated investors, they're now locked in on this recession thing. They're like, okay, it's happening. We know it's happening. So let's start acting and planning our portfolio accordingly. So that's significant because you're going to see the spot price creeping up. And like we said earlier, premiums, supply, all those things, it happens really quickly. So if you're waiting, again, get in line now and start doing that. But the things that are still low premium, yeah, the coins are definitely up. Coins are getting much, much more expensive very quickly.
Yeah.
But the kilo bars, 1,000-ounce silver bars, those are two things we're selling a lot of right now. 1,000-ounce silver bars can be hard to find in a hot market. So right now, they're available, but they can become more difficult. But those premiums are still relatively good right now. Kilo gold bar is probably about 2.5% over spot. 1,000-ounce silver bar probably 5%, something like that.
Yeah. Gotcha.
Not bad. And a lot of people have been talking about gold as being a inflation hedge for, you look back at all the data, but you've been saying recently that the data has changed now and you don't think gold is an inflation hedge. Can you explain that?
Yeah, so there's kind of two sides of this story, but the first side is really important because it's a narrative that you read a lot in our industry, a lot of newsletter writers, a lot of analysts, that's the selling point for gold is it's a hedge against inflation. And I was hearing it so often that I actually went back and took a look at the data to see if it was true, because I don't want, our team or any of our clients to believe it if it's not true. And what we found is that, yes, in the 1970s, late 70s and early 80s, there was truth that the correlation between the gold price and inflation was quite high. But the data over the last 40 years, and especially in the last 6 to 12 months, is telling us that the correlation is extremely low to non-existent at this point in time. So gold is not correlating to inflation very well right now. I can't tell you why. I mean, that's a macroeconomic question. There's smarter people in the world that can explain the relationship better than I can. But I can tell you this, Ivan, what's interesting is that even though gold is not correlating to inflation, inflation does lead to two things that are really good for gold. Number one, it leads to interest rate hikes, which we've already started experiencing. And gold, historically, gold and silver outperform equities during interest rate hike periods. And you've already seen that with gold. Silver, silver's starting to make its moves right now. It's interesting. Watch silver, because now it's gaining like 3% a day, and that's really a lot. That's silver gets hot in one of these markets, starts to run, but gold has outperformed equities, and that's a historical truth. The second truth is gold and silver do really well in recessions. And I think it's fair to say, I know in Europe, I'm in Europe right now, the newspapers are saying it's a recession. It's full on. There's no more, beating around the bush. In the States, everybody's kind of still
Right.
trying to kick that can down the road a little bit longer.
Well, this is the gold chart, and I've taken it all the way back to the 90s here. But you can see, I've seen people quote the statistic before. Gold from the year 2000 until today has gone from like what in the 200s, 250s or so, all the way up to 16. Gold has outperformed the S&P over that 22-year period. A lot of the Bitcoin people just like to look at the past 10 years where it's not as good. And this is essentially been a low inflation period of time. So that argument you made about gold not being correlated to inflation is actually, plausibly correct for the past 20 years. Gold has performed in a low inflation environment. Exactly the opposite of what you would think, correct?
Yeah, and what's interesting, it's opposite to the narrative, but that narrative is based on data, but often that data is outdated, and we do make that mistake as investors, right? We get stuck in this narrative and we don't double check. But what's interesting about this chart, I'll point out, is that most of the gains made by gold in the last, this is a 25-year chart-ish, going back to 95, most of the gains made are made during crisis periods. Most of it's made between 2008, 2013, 2012, and then again during COVID, we saw this run up 2019. So that is a super important message. If you believe that we are on the verge of a crisis period, and I don't see how you couldn't believe that, then you definitely want to have precious metals in your portfolio, and that is a reflection of what we're seeing right now at SWP for sure.
Well, you're right. We see these big spikes, and then it comes back to trends. But if you just sort of look at the trends here, and this is just going to be a very amateurish line here, you could sort of plausibly make the case that we've come back to trend. We got above trends here in this crisis.
Right.
Came back to trend. It's sort of back on that same trend line here. This is a long-term 20-year sort of chart. We just interviewed Lawrence Lepard, and he was like, he thinks we've hit a bottom here and it's up from here. I could see that case. We're on trend here to bounce, and if now is the crisis, you could easily see a run. A run up into the 25 to 2,800 range would not surprise me at all if we're going into a true economic crisis. So,
I would agree with you, Jim. I would agree with you. And it's funny. People always ask like the question, like, why buy gold? And we always say to people, don't buy gold to make money. You buy gold to preserve money. But when you look at that long-term chart, like, it's important that you do. Gold still made you 500% since 2000. That's not a bad return.
It's not it beat the S&P even when you include dividends and reinvestment of dividends for the S&P over a 20-year time frame. Gold has beaten the S&P 500. So kind of an interesting chart. A lot of people are not aware of that because they think of the Bitcoiners are always saying, just looking at the 10-year chart for Bitcoin versus gold. And
well, then you just pull up a 1-year chart for Bitcoin and let's talk about that.
Okay, well, you want to? You want to go? We're going to piss off some people in the audience, but let's do that.
I don't want to piss off. I own it too. I'm actually
all right. We've got some Bitcoiners who are also gold bugs and silver bugs, but
yeah, that's right.
So I try to avoid talking too much crypto, but here's the Bitcoin chart.
That's right.
And this is the monthly Bitcoin chart. So Bitcoin had a great run the past 10 years, or even as recently as 2017, 5 years ago, Bitcoin was below 1,000. But they had this great run up to the 60,000. I mean, 1,000 to 60,000. Hey, they got a lot to crow about, right? But what's happened?
No doubt.
What's happened recently since this high of 2021? November 2021 looks like it was the high.
Yeah, I always say I sleep better at night owning both. That's as simple as that.
Yeah.
So.
So Mark, you're in Germany right now, and that's, one of the big topics out in the market right now is energy prices in Europe and natural gas, the Nord Stream pipelines being blown up recently. And we all know who did it, but no one seems to want to talk about it, but we all know. And it probably wasn't Russia. It was probably the US. I'll say it.
That's what my theory is right now. I said that to a friend last night over beers, actually.
Oh,
So it
what
could
do
be
you
the
think
US.
your theory? What's your theory on who?
It was interesting. So I said that to a German guy, and he turned around and said, "No, it could be the Germans, actually." So I was like, "Oh my God, they have their own conspiracy theorists over here." It's interesting, but
I got to hear this. What's the argument that the Germans blew up the pipeline?
you know what? It was Oktoberfest, and it was really loud at the time. So it was.
There was
I
a lot
would
of
be
beer.
lying.
All right.
Yeah, there was
Just
a
a
lot
lot
of
of
beer, a lot
drunk
of music.
screaming.
It was hard to hear the whole argument. There was a German accent too, so I don't want to make things up on the spot, but he did start by saying that he thought it might be German. So I thought that was interesting.
To me, it doesn't make sense for the Russians to do it because they don't need to. They can just cut off the gas flow. There's no need for them to blow up a pipeline that
Right.
they built and they financed. So
That's true.
the Russians blowing up the pipeline doesn't make sense. None of the other EU players would have done it. Maybe the British, but I doubt it. And the Ukrainians, while they probably would want to, I doubt they have the capability to actually do so, an underwater operation so far away from their own country.
Who's the only one who said one way or another Nord Stream will not happen?
Well, we all have the quotes from multiple, politicians in the U.S. who have wanted
Right.
to just, blow up or stop or, put sanctions on the Nord Stream pipeline for many years. And Biden, I hear we can insert a clip here, but Biden just said back in February that if Russia invades Ukraine, Nord Stream's going to be halted one way or another.
If Russia invades, that means tanks or troops crossing the border of Ukraine again. Then there will be no longer a Nord Stream 2. We will bring an end to it.
That's sort of an act of war, isn't it? It's sort of if you attack the energy infrastructure of another country, that is legitimately an act of war.
That's what's interesting. That's what's interesting there. So the theory that it's Americans or American led would kind of make sense there, because it would be considered an act of war in a foreign country, and those are allies. The two countries where it happened are allies of the United States. It's an escalation, any way you look at it, right? And that that falls into, does the U.S. have an agenda to escalate the conflict? But getting back to what you're asking about energy here in Germany, I can only comment on Germany because it's the only country I've been in since I arrived here. But interesting is daily conversations and staying in a friend's home right now. You'll probably notice the lights are quite low.
Right.
They're concerned about their energy costs. They're asking us to turn off the lights in rooms we're not using and unplug our laptops when they're fully charged and things like that. And downtown Munich, which is a beautiful, beautiful place that's usually lit up with all these a lot of lighting, and all the buildings are lit up, and you have these blue lights, and it's really spectacular. You walk through there now and all the lights are off, except very few businesses that are choosing to pay, for those energy costs to keep their lights on. But it's noticeable. I asked right away when I walked through, I was like, what's going on here?
Wow.
And so so it's a real thing, and very much concerning and top of mind for German people.
Well, does that lead to more people? Do you get the sense Germans have always been gold and silver investors? I mean, it's part of their culture. It's part of it's built into their DNA from their grandparents telling them about the Weimar era. Are your sales heavy in that region?
Well, we don't sell. We're not proactive. We don't sell in Germany. This market is dominated by Degussa and other large players. But I can tell you, yes, per capita, Germans consume the most bullion in the world, more than Chinese, more than Indians and Chinese consume gold because they have huge populations and there's a lot of jewelry demand. And China obviously has a lot of bullion demand. But on a per capita basis, Germany is actually the largest market in the world.
Gotcha.
And that's exactly has to do that. All that common sense investing is passed down from previous generations. They invest in two things here. Generally, it's real estate and gold, and then the stock market is like kind of a distant third for most people.
Gotcha. Well, Mark, thank you very much for joining us. We appreciate an update from you. You're always got your your finger on the pulse of the gold and silver markets because you deal with it so closely. We really appreciate it.
Hey guys, always a pleasure being with you. Thanks for having me.